many people ask questions, what makes a great investor, what makes a great shipping company, etc. But sometimes it's as interesting to flip the equation and say, what makes a terrible investment, what makes a terrible investor, and sort of like avoid those mistakes that can lead to bankruptcy. So when you are working on this sort of like, I wouldn't maybe call like SWOT operations on bad deals, do you see any patterns? Is it just over leveraged, or is it also people who, ride the cycles and, timing, you can plan timing and hope for timing, but sometimes the timing is just against you, right? So did you see a pattern on mistakes not to do when today, you make investments and, are into the market and actually have to commit by the investments you make on vessels, etc.?
Absolutely. And I would say if there are two skills that is essential, to deals, in the shipping side, I would say in cyclical business in particular, or maybe also in business in general, it's a combination of greed and paranoia. You have to be greedy, of course, because you want to get the deal done and you want to make a return, but you have to be focused on everything that can go wrong and manage that risk along. Because what we have seen over the years is that there are so many deals, and when people come to you with a business proposal, you see that hockey stick expectation. It's thin now, but it's going to be phenomenal. We're going to own the world. And, surprise, surprise, very few of those projects actually end up looking like that. But some do. So it's all about finding the deals and trying to do the deal you feel is right from a risk-reward perspective. So just as an example, in SFL last year, we did just about $1 billion in new investments. But we did look, I would say, closely at investments worth $19 billion. So you could say, round numbers, we did sort of 1 in 20 of the deals we actually spent real time on, not, where we modeled out, etc. And this is something you just have to do. Every new deal, you have to go at it with the mindset that this might be it. This might be the deal that really makes sense. And then you start digging into it. It could be vessel technology. It could be the segment that it doesn't work right. It could be the financing structure, etc. So there are always many things that you have to look hard into when you make an investment. But you have to combine greed and paranoia. Otherwise, you're almost doomed. If you're too paranoid, you won't get a deal done. And if you're too greedy and don't have the paranoia, you will lose it all most likely.
When you're doing these investments, and we have seen, the COVID situation, I mean, very few people forecasted that one. And then there's I would say like a sophisticated debate if it's a black swan or not, but it doesn't really matter when many people haven't, calculated a big global pandemic. And then you, of course, have the war right now. So, I mean, when you buy investments and vessels, it's easiest to create models of known knowledge or experience, but how do you also calculate the unknown, if you know what I'm saying? Like the things that hasn't happened, but it could happen, maybe in a crazy scenario. But still, if that scenario hits you, it's very difficult to be a ship owner.
Absolutely. And it's a very interesting question, because I would say, the black swan, as you referred to, I would say in shipping, black swan is really more something you should expect. It's not something you should be that surprised over. And the reason why is that you are combining a cyclical market. Remember, shipping is moving raw material for the most. Of course, containerized goods is a little different, but the basic sort of dry bulk, and tankers, that's moving of raw material from one place to another. It's a very cyclical underlying market for the commodity itself. And then you combine, call it operational leverage or operational volatility with financial leverage. So you could say it's a cocktail that's that's almost a recipe for disaster. And the problem we have in the industry at large has been, access to funding, access to cheap capital. Which means that if you combine, if it's so tempting to lever up, because that's when you get the super return on the equity. If you have a nice, say, 50% upswing in values, and you're levered, 5 times, it's phenomenal on the equity return. But also at the same time, when things go the other way, you will lose it all. So I would say that's the bigger issue with shipping as an investment, or as an investable asset or asset class, is that we've seen it too many times. Unless you are sort of a specialist who's following it day to day, if you're a ship broker, you follow it very closely, or if you have sort of some special sort of interest, so you do follow it, then you can really sort of play that market. Then you might be able to get out early. But for most investors, and for SFL, for instance, we have around 60,000 investors, predominantly US-based, most of them retail investors. And you cannot expect that all of these investors will follow sort of the spot tanker market or the spot bulker market from day to day. So we've seen so many examples, in the capital markets where people have been, or investors have been, I would say, brought into investment cases, and it's turned out to be very, very different. We have some examples in the market out there today, companies who raised money, say 9-10 years ago, where we're down 99% from compared to the initial investments and compared to where those investors came in. Of course, that will spook most people. So what we try to offer in SFL, we try to offer, call it, I would say, a safer investment, or certainly a better structured investment, so you don't have to necessarily follow the spot market from day to day. So what we focus on is lower operational leverage, which means we have most of our vessels on longer term charters, and then we can have financial leverage, i.e. borrow money. If you have high operational leverage, i.e. you run your vessels in the spot market, you should be very, very careful with the financial leverage, because that is it's a combination that will take you down, and that we have seen over the years have taken down most of the shipping companies.